you all are well. It's good to see you guys again. All right, so let's begin. Let's see. The screen. Right. It's cool. So guys, so welcome to Entrepreneurship Hub again. All right, and right, so you can find out more information about us from ehubpt.org. Right, as you know, we started off sometime during the pandemic with help from the US Embassy. I'm just saying these things over again for those who couldn't hear us, right? And Rasha, can you pin our video? So, right, so good. Right, so the vision of the eHub is really to make a better space, right, for promoting collaboration, consensus building, and shared knowledge about business best practices. Right? Collectively, we make this Trinidad and Tobago easier for doing business. Right? So an example of that is to make sure access to finance is as easy as possible. An example of that is if we had a document saying, all right, this is what all the major banks agree to. Right? We agree that this is what entrepreneurs need to do to gain an account. So it is universal and it's easy. So that's an example of what we wish to accomplish. The last session we had was excellent in that we had a banker who said some things that we were not privy to, that we were not aware of. And he was like, wow, this is great knowledge. And therefore, we know we need to, we as entrepreneurs, need to engage the bankers to say, what are your requirements? What are you looking for? What are you looking at? Right? One of the major takeaways from the last session was when one of the entrepreneurs asked, so we made aware that they take a look at your credit score. Similarly, you'd hear credit score ratings in the US a lot. And then they said here in Trinidad that they look at the credit score. And they said, what? The entrepreneur asks, do they have access to our banking information and how we pay bills? And the answer was yes, there is someone tracking all of that. So when the banks determine, are you credit worthy, they, they do make an application to the entity and they do their research to find out, are you are you a good person to bank or to have, right? And that they're capable of doing that. So that was quite an eye-opener. So takeaway was make sure you read, make sure you pay all the bills, right? Make sure your credit worthiness is good. Make sure you pay yourself, right? Because they look at all that. So when it's time for us to go get a bank account, these things are being taken into consideration. It's cool. Right. So other things that we did was mapping the social entrepreneurial landscape. This is eHub itself, right? And in this project, we asked 100 entrepreneurs what their challenges, and they said access to finance, right? And which is quite interesting because when we did this course, there's a lot resonated with us, right? As entrepreneurs about finance and financial management. I think this is the biggest hurdle for us all as entrepreneurs to make sure we master. Right, other things like the Academy of Women Entrepreneurs is a program for women, and to get to learn to be better entrepreneurs. I had a girl from this say she didn't know what she was doing before, so she was really grateful. So we are now a 6th small business workshop. Right, we have the excellent Sandra Ramjit with us, right, and she has been most illuminating in the field of finance for us. So a lot of questions were asked and I can answer. So Sandra has to answer them. And same with this session, we want to make sure we capture your concerns to make sure we are really nailing the solutions. We shall pursue the solutions together. All right. So as you know, those are the Small Business Workshop series. It's to leverage some of the online courses and training material that we have available for you, free of charge. Make sure you use them before we lose them. Right? Make sure we work alongside key stakeholders. So today we have to thank the borough of Siparia for giving us their space for us to use and help and offer opportunity network and improve alumni engagement. So when I say alumni engagement, persons who are part of all the programs that are available to make sure we come together and chat and help each other out. It's cool. All right, so let us begin. So as you know, this is the link to the course. You have access to this, right? And you hit it there, you will take you to all the online courses, and you could go in at your time and select an area which you think is beneficial to you. One advantage of doing it with us now is one, consistency, and two, we have a local expert to give us that local perspective. So of course, our session here is fundamentals of personal money management. We already did some of these courses last week, but we did not make it all the way through, and we did not anticipate how many questions that the local entrepreneurs have that require a local answer right now, and for us to get a better local understanding of our environment. So we really want to take advantage of that. And so let's begin our third session.
Before we begin, I would like to say today is World Down Syndrome Day, so I hope that you're rocking your socks. You know, I will see just what the colorful because I can't see my dynamic super color socks. The next thing is today is also SEA.
I think they say someone not hearing. Hold on. Are you hearing us now? Are you hearing us? One second. I think you can hear me. Oh, just speak one more time. I think it just needs to feedback you a bit more.
Okay. Hi, good morning, everyone. Are you all hearing me? Can someone say yes or raise your hand? I'm hearing. Yeah. Good. Great. Excellent. Good morning again. I am Sandra Ramjit, and I'm here to assist Shem and the Ehub with presenting this workshop. But before we begin, I'd like to just say today is World Down Syndrome Day, and I hope that you are rocking your socks. You know, I am actually wearing nice brightly colored jacket today because it signifies you know the Rock Your Socks Day. The other thing today is SEA, and we wish all students writing SEA a successful day, and we know that the good Lord will bless them with confidence and everything that is required to have a great time at SEA. We've done work again now to be able to show that you will be
One second. So is it that you're only hearing me? Zoom has gone AI on us, guys. Okay, hold on. Let's see. I'm gonna change. Yeah. Try now.
Hi, good morning. I am Sandra Ramjit. Are you hearing me?
So.
Still soft, very softly.
And you're hearing me clearly.
Yes, we're hearing you, but not me.
That's amazing. Wait. One second. Make sure. 1 second.
Because probably we are using a computer mic.
Yeah. I feel so, feel so. Un momento, guys. Let's just change this quickly.
You know, we always have Murphy.
Mhm.
Murphy always comes into the party.
How about now, guys?
Hi.
Much better. Yay! All right.
So do I need to repeat what I just said?
Everything.
Okay, so good morning again. I am Sandra Ramjit. I am an accountant by trade. I am an executive agent with Guardian Life. I also have over 30 years experience in the finance, taxation, audit, insurance industry. And I have been assisting Shem and the EB Hub here with their personal money management series. I'm very excited to be here. We had a wonderful, fantastic session the last time, and we could not even complete the session. That's why now we are having a part 2 to this program. Before we begin, I don't know if you heard, but I would like to say today is World Down Syndrome Day, and I hope that we are all rocking our socks. Are you all rocking your socks? So I am, however, as I said, I have on this, lime colored jacket because I know you can't see my socks, but you can definitely see my jacket. Today is also SEA, and we are wishing all students a successful day today, and we pray that the good Lord will bless them and to boost their confidence. All the knowledge that they have, they will apply it, and we are positive that they will ace their exams today. So Shem, thank you. Over to you.
All right, guys, that was Sandra. Thank you very much. All right, so let's see. You have a lot of you in there. So we're going to take in our third course, and just easy.
Investing and credit because we didn't really touch on investments last time.
Okay.
We didn't do credit management. We had just done the budgets.
You rushed it.
Yeah.
All right, guys. All right. Going in from the second course here. Let's take it in. Making sure you guys hearing us. Are you hearing it?
Yeah.
Yes, I'm making sure. Yeah, I think they're hearing it. Oh, share sound. Yes, lovely. All right, so good. So go in.
Hello, my name is Theophilus Tego. I'm a financial student ambassador for the Society for Financial Education and Professional Development. Through the society, I work with college students on building their personal money management skills with an emphasis on budgeting, credit and debt management, and investment. Welcome to Fundamentals of Personal Money Management. This lesson is investing, credit, and debt management. In this lesson, we'll examine the principles of investing, the concept of compound interest, and the different types of personal investment tools that can help grow your income. Finally, we look at best practices for managing credit and debt. I'm presenting this concept to you in general terms. For information on specific personal money management, you should consult a qualified financial professional. Effective money management is an important skill because it helps you reach your financial goals. It involves focusing financial resources to meet your current and future financial needs, as well as your financial obligations. One aspect of money management that will play a key role in meeting your needs at each stage of your life is investing. Investing involves committing some of your money into assets with the hope that it increases in value. As a result, you create wealth and income for your future. When you are putting money into a financial vehicle, you are seeking the benefit of the potential growth of your investments. Consider ways to start investing a small amount of money early, so that through the power of compounding interest, the value of your investments increase over time. Two of the most important concepts about investing are simple interest versus compound interest, and how each factor into how your money grows. Simple interest is calculated and paid on just the principal or the money you deposited into the account. In contrast, compound interest is calculated and paid on both the principal amount plus all the previously accumulated interest earned. Think of it as building blocks. Simple interest is like adding onto the first brick laid every time. Compound interest is more like adding new brick to the last one you place at the very top. The wall gets taller, your money grows more substantially with compound interest. Money that is compounding is money at work. When you open a savings account at a financial institution, ask your representative if simple interest or compound interest will be paid on your account. Often, money put away for savings at home loses the benefit of compounding. But money put aside into a savings account earning interest that compounds frequently can make a huge difference as it increases its value over time. Let's look at an example. If $5,000 were deposited for 10 years, earning 6% simple interest annually, the account value in 10 years would total $8,000. If the same amount of money were to earn compound interest, at the end of 10 years, the value would be $8,954, almost $1,000 more. In fact, the amount will reach $9,070 if instead of annual compounding, the interest crediting method allows for quarterly compounding. What does this mean? It means that instead of interest being credited once a year, interest will be credited on the accumulated balance every quarter, making the amount earned every 3 months slightly higher. The frequency of compounding daily, monthly, quarterly, or annually can make a big difference. In this example, the accumulated value in 2 more years will reach $10,000. This is more than double the original amount. Any subsequent growth continues to benefit from earning on top of the old earnings, so that as the accounts get larger, it grows exponentially. When it comes to compounding, the rule of 72 is a simple way to estimate how long it will take an investment to double given the fixed annual rates of interest. By dividing 72 by the annual rate of return, you can get a rough estimate of how many years it will take for a one-time initial investment to double. In this case, we will divide 72 by 6, our interest rates, to find that it will take the original $5,000 investment 12 years to double. This example assumes that not only the initial amount deposited, but the amount accumulated will grow much larger if you continue to add more into the account. Depending on the length of time someone invests and the rate of return earned on the money, it becomes apparent that the accumulated earnings can exceed the principal. By taking advantage of the power of compounding, you can put in much smaller amounts in early years and let the work of compounding do the work of increasing the value of your account. Delaying or starting later in life simply may not give you enough time to take advantage of accumulated growth over time. Even doubling or tripling the amount contributed on a monthly basis may not allow enough time to catch up to the account value of someone who started early with much less and allowed the earnings to keep growing. Now let's look at other types of investments which can also increase in value and create wealth and income for you. These are stocks, bonds, and mutual funds. Stocks are securities that represent ownership in a company. If the shares of stock increases, the value of your ownership in the company increases. Bonds represent loans in which a company or government entity is essentially borrowing money and issuing you an IOU, promising to pay interest and to return the amount that was borrowed at a future date. Mutual funds represent a combination of the two by purchasing shares in a grouping of stocks or bonds managed by an investment company. Despite the volatility historically, the average return over a given period of time on investment assets outperform what can be earned in safer interest-bearing accounts. Unlike a savings account that offers savers a set interest rate, money invested in stocks, bonds, and mutual funds does not have defined interest rate when you invest. Instead, these seek a rate of return on the investment. There's no guarantee of what you earn on your investment. There is both the potential for gain or loss, and there's no guarantee that money will grow. This is what we refer to as risks when discussing investments. Investing involves a risk-reward relationship. Generally, the lower your risk, which is found in savings accounts and certificates of deposits, the lower the return. Conversely, high-risk investment like stocks, bonds, and mutual funds offer a greater potential return on your investment. Investment vehicles such as stocks, bonds, and mutual funds tend to fluctuate in value based on various market-related and economic factors. While in most cases, historical return in this type of investment represents high overall gains, it should be expected that market or economic conditions may also result in negative rates of return or a lesser return than expected. Smart investing requires that you choose investments according to your time horizon and risk tolerance. Your time horizon relates to your life stage or the time you think you will need the money. Risk tolerance relates to your ability to withstand changes in the value of your investment that may occur from time to time. For example, if you are investing for retirement that will not come until 25 or more years in the future, you can afford to invest in a more risk-tolerant way, taking a chance on high risk, potentially high-return financial vehicle or two. Even in years of negative return, the account has time to recover and make up losses before funds are ever needed. If, on the other hand, you know you need the money being invested in 3 to 5 years, it makes sense to limit your risk exposure by making low risk, low volatility investments. While smart investment is but one aspect of your focus on the road to creating wealth, the issue of credit and debt management are vitally important to your financial well-being and economic stability. The mismanagement of credit and debt can drain your financial resources and limit your ability to make investments. Credit and debt management are those areas in which what you don't know can hurt you really applies. Credit is a powerful tool for wealth building. It gives you the ability to acquire goods and services today but pay later. Credit can be used to pay for your education, purchase a vehicle, help fund the startup of a business, or buy a home. When you are granted credit or use a credit card, you are essentially borrowing money and making a promise to repay it back, usually with interest. When you use credit to pay for expenses, you are committing or giving up the future use of your money. When applying for credit, potential lenders will look for these top 3 factors. They are called the 3 C's: capacity, character, and collateral. Capacity look at your ability to pay the debt that you are seeking. That is, do you have the income and resources sufficient to pay back the loan and maintain the payments? Character is a consideration of your creditworthiness. This refers to your reputation for paying bills when due by considering your past payment history with other lenders as an indication of your willingness and ability to honor agreements. Collateral is an asset pledged to the creditor until the debt obligation is paid. Example, if you own your home, it may be used as collateral to secure a loan. Management of credit is extremely important when it comes to your financial health because negative information on your credit reports follows you for years, well after an incident or late payment has occurred. Even if you are able to obtain credit, the cost of credit is increased in the form of higher interest rates. Another issue most people may not be aware of until it's too late is how credit is used by others in making decisions unrelated to borrowing. Employers, landlords, banks, service providers, and insurance companies use your credit history as an objective assessment in determining whether to accept or deny applicants, deny services, or charge higher fees. This can make a difference in what job you get, where you are able to live, or your access to choices in obtaining basic services. Prioritizing debt reduction now by adjusting your budget to pay more than your minimum payment can help you get on a better path to have more money to invest later. Money management is not simply about how you spend money. It's about considering and making disciplined choices. Despite having limited current resources, carefully considered financial choices that you make now have an influence on how you are able to build a foundation for your future financial well-being. Thank you for the opportunity to share how investing, credit, and debt management are tools for long-term financial success. For more information on this course and to access related resources, visit our website.
So guys, how was that video for you? Good, good. Online folk, let's see what you're saying. All right, I see that Cindy is saying, saw a presentation by Unit Trust yesterday. They said they give compound interest on deposits, but I didn't know to ask how often the compounding is done. And they did not say, we'll ask. That is true. And so yeah, because we just don't know. We don't know all of this exists. All right. So, and I mean, I didn't learn this in school either. So you don't know like where to put your money or all the options available. In the last session, we spoke about government bonds, right? And Sandra, I know you were saying something.
Yeah. So, we're looking at, most of us feel that, saving in the bank is the safest thing to do. What do you all think? No? So, a lot of people like they like to save in the bank because they feel it's less risk, right? That they have access to the cash at any time that they want. However, when you look at the bank now, the bank is really just saving money. It's not investing. There's a difference between saving and investing. Saving is like saving under your mattress. There's no growth on your money. And inflation can actually erode or make your money value less. Because if you save $10 now and it doesn't grow, $10 now, I would say just about maybe 5 weeks ago, $10 could have bought maybe, I don't know, 2 sweetie. It's really them, but no, it can't buy the same thing that you would have been able to buy last time. No, I'm not an avid KFC fan, as you KFC. But I would tell you that maybe a year ago, in fact, not a year ago, just recently, because KFC just increased their prices, you could have gotten an 8-piece for maybe $105 or something. So no one 8-piece is $135. So if you save that same $100 on their mattress, and that doesn't go, what you could have bought then, you cannot buy now. So inflation licks it up. So what you have to look at is where do you want to put your money? Now, we have between a rock and a hard place because you have to put your money in the bank regardless. It has to go into the bank. So in order to be able to mitigate, and I say mitigate that bank charge, because every month $25 comes out of your account, right? Your interest rate, what is the interest rate at the bank now? Anybody knows? How much? 9.7.
That's how much it's charging us.
You mean, no, we're talking how much interest you are earning, not how much interest you pay on a loan. I think it's like 0.0 something percent, right? So actually, when you put money in the bank, your capital, which is the amount you put in, we call that it is eroded, which means that if you put $1,000, when you go back to the bank, you're not going to get $1,000. If you left it for a month, you're going to get $975 back. Yeah. And if you leave that $1,000 for 2 months, you're going to get back $950. So there is no appreciation or no interest earned on our money. And that is what you call saving. But people will look at safe investment because they feel, yes, I want it. There are investments like mutual funds. And so Cindy was talking about the unit trust. The unit trust, they have money that they have mutual funds whereby the fund itself, the unit itself grows. So we have something called capital appreciation, and you talk about interest earning. So I'm not trying to put a little spin on some things here, but you have to look at the different types of investments. So you'll have investment like a fixed deposit. When you put money in a fixed deposit in the bank, it earns interest. So if it's 5% interest, it might be simple interest. So 5% is added on every year to that fixed deposit amount, right? So that is what you call simple interest. And that is your savings. So you have different types of interest. Then we look at mutual funds are what they were talking about. It means that mutual funds is what you call capital appreciation, right? So, you know, like if you buy a stock in unit trust, you buy a stock, they have the appreciation on, you buy a stock for $13. So you invest $100, and I'm there for calculation's sake, you invest $100, and the stock value is, or the unit value is $10. You get 10 units for $100, right? But based on the market, and that's why they say it's a little risky in some cases, based on the market, the stock or the unit that you buy may go up to $11, right? So then the value of your investment at unit trust is now 10 by 11, which is $110. You didn't earn interest, but the value of your unit appreciated in value. So you now have, they call that capital appreciation. It's not interest you earned, right? So let's say they had another, we had really good, because right now the volatility of the market is, is as you can see what's happening, right? The interest rates are down, up, down, up, down, up. So we do have it like a yo-yo. However, in good times, the markets tend to rise. And then what happens is that you get good appreciation on your investment. So unit trust has capital appreciation, and they have what you call a money market fund. So the capital appreciation is they buy a unit for $10, it grows, it comes to $12, but it could go down to $8. If it goes down to $8, it means that you invested $100, you will only get back 80. But if the unit itself grows to $12, you get back $120. So that's where they talk about the risk involved. Whereas the money market fund, which is the one that you buy at $20 only, and I use unit trust as an example, it means that at $20, the unit is valued at $20 and interest is in on that. So it's not capital appreciation. I don't know, you have any questions? I explained it okay? All right.
People online.
Yeah, online. Any questions? So let me tell you, I work at Guardian as well, right? So at Guardian, we have what you call a mutual fund investment. One of the guarantees on our fund, or the guarantees we have, is no fees. Principal is preserved, which means that whatever you put in, you'll never get less than that, right? So no fees, principal preserved. The interest is calculated daily and credited monthly. So your interest is compounded, right? So you hear what I'm saying, right? It's calculated daily, but it's credited to your account monthly. So it's compounded, you can say daily on your account. Yeah. When that happens, you also have access to withdraw your funds at any time. Now, the rate of interest at this time is about just 1.6%. So in order to get all those stabilities, all those guarantees, the rate is low because you want low risk. So you do not get high rewards, you'll get low rewards, but you get stability. So persons depend on your risk. So some people might say, listen, I am very, I do like to take risk, you know, Shem. I afraid if anything happens, what will happen to my money, right? So you find out that these are the people who would say, well, I will invest in mutual funds, etc. But it's always good to have a safe investment if you are also taking a risky investment, right? So it's good to have a safe investment. So you have that, so you know, I'm older, I don't want, you know, the money going up and down, I want to keep it. Then if you want more, so at that, you see, low risk, low reward. However, you decide that you want to invest in some stocks. You're getting a little bit aggressive now, right? You want to invest in stocks. So in stocks, stocks is buying shares in a company, right? Now, company profits could go up, company profits could go down based on probably change of directors, based on the products that they are selling. Nobody wants to buy it anymore. So then the profits in that company could go down. And if the profits go down, obviously the share price will go down. So if you see this company and you bought shares at $10, and then now after 1 year or 2 years, you realize that, hey, something happening, you find the shares constantly reducing, you are going to be losing, right? And that is where the risk comes in. However, if you invest in shares and the company is doing extremely well, they're expanding, they're diversifying, people love their products, and shares keep climbing, you can actually double and triple the income, because a share that you bought at $10 could now be valued $30, $40, and you could cash in at that point in time and reap the reward. But there's a risk, and you have to be willing to accept that risk of how you would like to invest. So when you're investing in stocks and shares, I'm gonna tell you, my little advice is that you invest money that, if you lose it or if it reduces, it's not going to affect your financial stability. So in stocks and shares, invest your extra money. So Shem has a little extra money. So Shem, if you want to, and you know that you have no use, and I should not say no use, but you want to get it over a long term. Stocks and shares is things that you have to go over a longer period of time. Mutual funds is like short-term investments. You want to save money now and you want to have access to get it back. Stocks and shares, you have to leave that for a long term because of the volatility in the market. However, you also have to be monitoring those really tight, because once you see it goes up and it peaks and start to come down, you need to say, listen, do I want to sell, or do I want to take the risk of it going down and might reach back that peak? So you have to be on the ball to make decisions regarding stocks and shares, right? With the government, they also have very stable investments like bonds, and they just had the NIF recently, right? Bonds is something that you can invest in. Again, the interest is very low, but it's a guaranteed one. So you buy $1,000 bond, you might pay $750 for the bond, because what the government will do is whenever they redeem the bond, you will get $1,000. So you buy the thing at a discount. But bonds and stuff is like you basically lending the government money, yeah? Right? When you get bonds, when you do bonds, it's really you're lending the government money and they pay you back an interest rate at their time. So they might say, we have a bond that has a period of 5 years. You know that bond after 5 years, if you paid $750 for it, the bond is worth $1,000, you will get $1,000 at the end of 5 years. But it's guaranteed. So the government will guarantee that investment, that bond. Yeah. I don't know if anybody has any questions, or you want to elaborate on anything else.
Any questions in the chat as well?
On the chat, tell me, what are some of the things that you all invest in? What are some investments you all invest in right here?
Yeah, where is your money currently?
Mm-hmm.
In the bank. Guilty.
In the bank.
Wait.
Yeah. I would have invested in the stock market with an entity. And during that process, I did reach a stage that I saw that, I think it was, you have your buffalo, as the case may be. I can't remember exactly which one. And it was going up. So I said, you know what, I'm going to leave it and let it grow. And then I ended up seeing it starting to come down gradually. So the advice I got was that, let's look at it and monitor it, because what happened, I ended up leaving it for a period of time. So while I'm on it, I see this thing coming down. And then I lost it. I say, oh my goodness, all that money got. So sometimes you just have to waver, look and see. I think You're conscious? A mindset sometimes. So yes, that was my experience. But I think it is still a good direction to head in. And I would encourage anyone, it's just that with the proper knowledge and the guidance, you will know when to lock off and when to go back on stream.
Thank you very much. Thank you. So yes, I think yeah.
You want to? Yeah, so that's a really I mean, it's a good experience to share. Yeah, but it's a learning experience, and based on right, so based on that, as he said, it's not that you don't invest, but you have to. Stocks and shares are something that you have to constantly monitor, and you have to understand what is your risk tolerance level. If you know you're going to get a heart attack when you start to see your money decline, partner, do not invest it in risky investments. I'm serious, right? If it is that you know that you're looking at your money every day and every minute you look at your money, you want to see it climbing all the time, you need to invest in a safe investment. Otherwise, things are going to happen. But if you can afford to be able to invest and then just leave it, monitor it ever so often. But if you keep on looking at your investments every day, you're not going to see the growth. And you're going to be getting panic attacks, right? So investment is something that you have to take that money. And again, as I said, when you invest in, it is money that you do not need right away. If you do need the money right away, you put it in a safe investment like the mutual funds and all these things that you could have access to. Stocks and bonds are something that you don't have ready access to because there's a process to go through to be able to liquidate the stock, right? And the bonds. If it is that in government bonds, you also want to invest in that, that's also long-term investment. So you have to understand your time horizon. What is it that you're looking at? What time frame you would like to get back your return on? You'll want to see whether you have a high risk tolerance that it doesn't matter if the stocks go up or down. You could leave it in the long term to reap the benefits, right? Or if it is that you can't do that, then look at different options of stocks. So you must know what is it you want. And then why you want to invest. That's a very important question, Why is it do you want to invest? Is it for just investing and whatever happens, happens? No, you have to understand why you are investing. Is it for capital appreciation? Is it that you want to earn interest? Is it that you want to save to build a home or buy a home? Is it that you want to buy a car? Is it that you want to leave a financial legacy for your family? Right? Is it that you want to save to have an emergency fund, probably for any medical expenses? For example, COVID was a perfect example. And I'm sure a lot of us still haven't learned from COVID and saving and have an emergency fund set aside to at least have 6 months of your pay set aside in a fund. If anything should happen, that you can still access that money to be able to continue to live. Because let me tell you, COVID gone, but it kind of just only resurfacing a little bit. We could get another crisis, but we have to keep that in mind.
But with regards to the automated system, I think that is a good entity that is on the stream that will help persons who are in the stock market with regards to if you are busy, that system is an automatic system, so it will be able to lock off and come on stream or advise you what direction.
Thank you. All right, that's good stuff. Good conversation. Online is saying somebody wants to learn to invest. Oh, where can we buy government bonds? All right. Somebody say if you don't remember that you bought the government bond, is like giving the government money. Right.
You have to redeem it.
Right. Inactive balances are also grabbed by the bank. Just a random question, guys. How many of us lost money due to like an inactive account? Like you have an account.
I have one of them.
Yeah, they have an account somewhere like when you was young, you started and you just don't know where it is now. I guilty too. I don't want to call you back. Because you gotta go and talk to them just now. Yeah. I just say like, I just want to go and give my name and have all the money that they owe me, right? Because I have like one bank current to use and the others, money lost, yes. I think even the online side, yeah, Cindy said, Tiffany said her as well. Wow, this is a pandemic.
And I see somebody put credit union shares. Credit union is also a very good place to save. However, just bear in mind that something, because I'm in the insurance industry, something that I have learned, because based on research, is that with the credit union, only up to 50,000 that you have in your shares will be paid to your beneficiary whenever you passes. Anything over 50,000, you have to probate, and you have to wait a certain number, however long the probate takes place, to be able to get the extra money. So just for knowledge purposes. Also with the banks, please bear in mind that with the banks, if your name alone is on an account and you should pass away, they're not just going to, and you even think you put a beneficiary on it, the beneficiary not going to get our money, you still have to probate. Right? So I would recommend, and I learned that I was in an accident in 2002, and I realized that these things do happen. I went and investigated all these things because I have investments in all the different areas. And what you need to do is, if you have a joint account with someone, it means then that if anything happens to either, you do have campaign, or if you have your spouse and they have access to take your money, or you have a child and they have access to your money, or you put a sibling and they have access to your funds. I know that sometimes I worry, but you could do like what I do. My husband is on my account. However, only I have an ATM card. Right? I'm not saying that will prevent everything, but it means that the bills come in his, so both of us, all our accounts in both names. I have even put my daughters on my account as well, because when I learned that if it is, you should pass, there is no access to your account, you have to probate that money. And if it is that you take the person's ATM card, and I know how people do this, that when the person dies, they know the password because they're probably going in, and they take the ATM card and they withdraw cash from that ATM card after that person passes. That is fraud. That is fraud, because some people, just as soon as they die, they run fast and they try to withdraw whatever money in the account. That is fraud. And they can lock you up for doing that.
That's a good question. I've experienced with probate, but I want to know, it's just me alone, right? What is your experience with probation, and like in terms of the time that it takes to be completed?
Probate takes sometimes about 6 months to 3 years. It depends on the attorney. It depends on the documentation that you have, if you do have all the proper supports. Because, and then too, right in the family, you have infighting as to who going to be the one to do the letter of administration. Okay, this one saying, Daddy, leave it for me, Mommy, leave it for me, and what have you. And that is what sometimes takes the time for probate. I'm telling you, we have an example right now, and the children are fighting among themselves because everybody wants to be the leader to do the probate because they want the assets, right? So it depends on you, the individual. It depends on the attorney. It depends on the documentation that you have. I would advise everyone to do a will. Please do a will. When you do a will, what will happen is that you dictate what you want to happen, and then the will is read, right, by the attorney, and that is what is sent for probate. When the will goes up, it's very easy because it's already according to your wishes. And once they validate the will, right, that it is void, that it is true, right, and valid, then they will do the distribution according to what the will states. So you need to do a will, but in the apps, even if you have a will, for example, insurance policies, make sure and name of your beneficiaries on the insurance policies. Have no fight in there. Whoever is named on the insurance policy, when they go, they will get the money. And you could change the beneficiary at any time. So if you find you put it on X name, And excess are the treat you good and you want to put on Y name. Right? It depends. You could change the beneficiary.
On occasion.
The will come into contest, and that is why they have to make sure and prove that it's a valid will. So sometimes somebody already reached 75 and they're on their bed, and then one child come and say, Daddy or Mommy, you know, they bring a lawyer to do a will. That will could be contested because then the person probably was not of sound mind to be able to do a will, right? So again, it depends. That is why the will has to be proved to be a valid will, and it made, and he was in sound mind and what have you. So we do have trust. But some of the banks right now, they used to do trust, but they know, I don't know what is happening because I was trying to get some of the banks to get some information on trust. So if you have a minor, because if you put a minor on as a beneficiary on insurance policy, etc., remember, a minor is someone under the age of 18 who cannot transact business. So anything, they will have to wait until they attain the age of majority, which is the age of 18, before they will be able to have access to the money. So I had a claim, one of my clients died and she left 4 children. And I had explained to her what would happen, that they would have to reach the 18, and she said, no problem. 2 of the children were 19 and 20, but she had 2 small ones, 8 and 14. Right now, the 8 and 14, the money is still, their portion is still at the company waiting to be given to them when they get to 18. If there is a trust that you could do a trust at the bank, excuse me, what the trust is that you will have to pay the bank a percentage to keep the trust, and you will have to dictate in that trust what you want to happen with the money. So you might say you only give the money to the child based on they producing like university invoices or food bills or whatever the case may be, and then that's how the money is disbursed. So bear in mind that they can't do that, but you have to pay an amount like an administration fee, or they call that trust fee, whatever you want to call it, to be able to manage the funds for them. In that case, auntie and uncle, nobody have access to that money except the bank and the legal guardian or the child to be able to get that money based on producing those invoices, etc. Yeah.
So let's say,
And tell me your name, sir.
oh, Vinci, sorry.
Dave?
Yes. So tell me something. Let's say you have a relative, and for some unforeseen circumstance, person gets in an accident overnight, and you have their access to their bank account. From what you are saying, that is fraud. If you withdraw that person money,
The person died or the person is injured?
let's say they died. So if the system picks up with you eventually, or let's say the person died overnight or just so, right? You can be charged or jailed, or as the case may be. That's what you are saying.
You can be prosecuted because you have unlawfully taken that person's card, whether they are alive or if they are alive and they consented, no problem. But if they are dead, they cannot consent to anything. The bank is not getting the money. What is going to happen is that the relatives will have to probate. They'll have to do a letter of administration. And when they do that, then they can approach the bank with that letter of administration to be able to collect the funds and all the whatever assets that the person would have. But it's going to take a while. Of course, it comes at a cost. You will have legal fees.
So let me just translate for the persons online who didn't hear the question. He's just asking about, should, let's say, a close relative die in an accident, if he could take the credit card or cards and run to the bank and withdraw the funds, right? And the answer is, well, that's fraud, and you may be prosecuted for it.
If they catch up with you. Now, let me make a disclaimer. I am not an attorney. I am not an attorney. And this is the whatever, and it's not advice, but whatever I'm letting you his opinions is based on what I know. And I have had discussions with attorneys, etc., on this. So I am not an attorney, so don't take me to court. Right? I'm just expressing some opinions that I know about, and those are some of my views. But I mean, those are the things that we know happens. But you can get better information directly from an attorney. Definitely.
Hey, hold on. No. That's all. I want the audience to hear the question.
Well, that's a personal statement I was just making, that if they pass just as any pension check come, you definitely can't cash that. Although you're the person that has been assigned to cash in this check all the time. Once they die, and we could say they may not know, but there's somehow they know when these, I don't know if when the birth generated, the death certificate is computer generated now, they can see that this person died so and so, and they check cash, but it does know.
They will know, and that again is fraud, because what happens is that, remember, the pensioner has to do a life certificate every 6 months, right? If they don't turn up to do a life certificate, of course they will assume that the person is no longer around, person died, so they will then obviously want to get a death certificate, and when they get that death certificate, it's going to have the date of death. And they are going to now investigate to see if the checks that have been coming are cashed. And whoever it was cashed by have to return that money to them. If they can find it.
Another incident that happened to me was my neighbor died unexpectedly, well, relatively unexpectedly, but she had no will, right? She had a business. Her vehicles was attached to the business, right? So now it was a whole issue of how could they transfer this vehicle and house, right? So, I mean, we purchased the vehicle, but it was like out of goodwill, because we understood who it was, we understood the sister, and we almost have a arrangement or agreement that this vehicle will pass to us. But in terms of this, like a legal, clear way, this has probated the vehicles on my name, right? Issues, right? I have asked, and that will hasn't probated. I don't know why, right? The house next to us, she wanted to sell it, could not sell, right? Still hasn't been sold, and this is 8 years or something, right? So things to think of. Make sure your house in order.
Yeah. And that's why, I put a plug here with insurance as well, because people tend to feel that when they die, whatever assets they have could just pass on to the next generation, right? And sometimes that may or may not happen depending on what documents and stuff they have in place. But then too, when you pass away and you are the breadwinner of the family, the family needs financial support, they need liquidity. If you just leave a house, they can't even sell the house because the house on your name. So they can't even sell the house to get liquid cash, and then where are they going to live? So, people kind of discount having insurance and stuff, but it really plays a very important role in having financial freedom. And I'll tell you a story. I was involved in an accident in 2002, October. Coming on my Macaulay, I saw someone crossing the road. I tried to avoid it. I didn't hit them, thank God, right? But by swerving and swerving and swerving, I ended up hitting the bridge, the bridge, and my car became airborne. And all I did was I closed my eyes and said, Lord, this is it, because I thought I was going to die, right? When I did open my eyes, I was wherever facing up, right? Didn't know if I was dead or alive, because remember, I never died before, so I don't know. So 2 guys came down the hill, and when they started to talk with me, I realized, well, hey, I'm alive, right? Nothing happened to me, thank God. I just got some bruises and stuff, but my car was a total write-off. Let me tell you, I have 2 daughters, and that same, the day before, they now cast, I took a mortgage with TTMF, and they now cast the foundation to my house, right? I'm the breadwinner of the family. My husband works for Sometimes Casual. My 2 daughters are going to school. If I had died, and I have no insurance, by the way, I was in insurance. I was the Caribbean finance manager for GlaxoSmithKline at that time, right? I was in insurance. But I make sure the company assets insured, but me, yeah, I say insurance, I don't really need that. But when that happened to me, the first thing came to my mind was, if I had died, what would happen to my children? Where would they live? Because TTMF is coming to take that property and they're taking house and land, right? Where would they live? Where would they get money from to go to school? Would they be able to achieve what their goals are? I mean, he's really kind of making a little thing, you know? How would they continue to survive? And let me tell you, that really rocked me at that point in time. I'm walking up the street at the hill to come up here. And that played in my mind. The next day I got an insurance agent from Guardian 7 and said, please come and see me, because that must be the easiest sale he get. But at the end of the day, we don't understand the importance of having that. No, once you're alive, let me tell you, you can make sure your children are well taken care of. You'll do whatever you need to do to take care of them. But you know, we wouldn't even take care of ourselves and make sure that while we are alive, we provide for them. So if in case we're not here, they are going to have that same financial care. I can't say they'll get the same love and attention. They may, but they wouldn't have that from you. But you could at least ensure that they have that they don't have a financial burden. So that's something that, you know, people need to be aware of. I learned the hard way and I live a second life. I am a miracle. And I tell people, I could tell my story. There are many people who cannot tell that story, you know? So take care of yourself. And I always ask the question, if you had a goose that lay in a golden egg every single day, which would you insure? The goose or the egg? Let's hear from the chat. What would you insure, the goose or the egg? Let me hear. The goose? The goose? The goose? The goose? The goose? The goose? Anybody what they say?
The goose.
The goose. Fantastic. They know you are the goose, right? Do you all know that you are the goose? Because you are the one that is working and producing that golden egg every day. But how many of us really think like that and make sure that we protect ourselves financially first? We rush to ensure the car and the house and all that. But you know, if the car is destroyed or the house is destroyed, you will work hard because you are alive. You will work hard to build, to rebuild, and to buy a new car or to buy a second-hand car, right? But if you should pass away, what happens? The goose has died, the golden egg stopped coming. So everybody on standstill. So it's just something to think about, and I thought I'd just bring it to the fore. But since we're talking about investments, because insurance is also an investment, stocks, bonds, savings, mutual funds, we have all different types of investments that you could look at. Just real estate is another investment, right? So we have different sorts of investments. You have real estate. Well, of course, your savings, life insurance, is, as I just talked about, is also an investment tool. Shares, stocks and shares, bonds, and you also have that you can invest in foreign investments as well. But again, you have to look at, you have to weigh the risks. High risk, you get high rewards. Low risk, you get low rewards. What?
I'm just asking how much it costs to get into stock exchange.
It doesn't, no. You go to a stockbroker, and I think they have many, the banks normally have the stockbrokers, and they do have some independent stockbrokers. They go to a stockbroker and you have to invest, let them know you want to invest a 5,000 or 10,000, whatever they will tell you. Right, 10,000 and up. So you need to have at least 10,000 up to invest. And once you invest that, they will then have their whatever fee that they have attached to it, of course, because they wouldn't just invest for you for free. Sorry? No.
No. Un momento, 1 second, one thing. Bosch. What?
Yeah. And yeah, the boss. And they, when I did inquire, they told me that I think it's $35,000 minimum That's the least that you need to have, and they will work it for you. They will do the work. So yeah.
So they give you a broker.
Sorry?
They give with
Yeah,
that
broker.
25,000 you get a broker and everything to handle your business.
Yeah.
Nice.
But if you're going that way, it's the best way to do to have a broker there because you, yeah. You also have the banks, eh? Some of the banks also do it.
I would say I invested in the bank. I invested, I invested in the bank for citizens. But you have to choose which one. They give you all the information. StockX for Trinidad, they got lots of information.
Yeah.
But I would say that my experience has not been all positive, right? In terms of invested, I say company Massey, and they went to Jamaica, right? So they had a client. Actually, during COVID, they were doing very well. So invested in them. They went to Jamaica, so it skyrocketed. I invested 15,000 at a time. So at one point in time, our account was 18,000. I say, oh gosh, that's good investment. It is now worth 6,000 or something. Right? So I caught in that period saying, do I take my money and cut my losses? Do I wait for it to hopefully come up? Right? Do I take my money and invest in myself? Right? So that kind of thought process. And this is the bank. So perhaps if I were with a stockbroker, they may have said, hey, this is the time to clean, to make your money, right? To sell. Citibank? Yeah. Okay. All right.
But again, you have to understand the time horizon. With stocks and shares, you have to be willing to have that time to invest. And as I say, that should be money that you invest in that you're not going to have immediate use for it, and you can afford to set that aside. Because if you set up, because right now you may say, God, I could invest 15,000, I only have 6,000. You understand? No, for me, because of my tolerance level, I would say I would leave it there for a while, because economy, you have to look at, and this is where you have to look at the economy. The economy is picking up. Gradually, it's picking up. Prices are going up, etc. So I would leave it in there for a bit. Leave it in there, and if it comes back up, when it comes back up to what you actually invested, and you feel you could take it, but just as soon as you see it start to go down then cut your losses one time. Because I had something with the public bank, and I invested $35,000, right? And after 4 years, when I watched that money, it was 17,000. And hear me, I say, my God, I lose all my money there, 17,000. And studying, just like you, what I should take it, what I should do. But I say, no, let me leave it. I keep on looking at it every year until it eventually reached back up to 30. And I say, you know what, I taken it one time. I didn't wait for it to reach even 35, because I say I'm not, you know, this thing, only my heart only pumping, so I see it.
So with that, I want to go on to the next part, which is about making smart money choices. Yeah. All right, so let's take it in.
We always tend to get carried away.
No, but it's good. It's good information. It's good information. It's like, yeah.
Hello?
Wait. Ask a question and repeat it for the audience.
Individuals on the social network, and they are promoting that they make 20,000 on the stock market or as a placement. Is it really genuine? Because they will say to the Bitcoin, you will make X amount, big turnover.
All right. So he's asking, when you look on social media and you see persons saying that they make big amounts like 20,000, are they really genuine? Well, you have to remember that there's Trinidad Stock Exchange, there's US Stock Exchange. So which one are you talking about?
You're looking at the US market, because that is what you are interested in.
Yeah, pen too, yeah. Pen too, yeah.
US, you will have the Japanese yen, you'll have the euros, and all those entities. So that is what you are looking for. That is what you are marketing for.
So are you speaking about the Forex market right now with that? Okay, so here what? So being an accountant, right, being in the finance industry, I am very skeptical about those get rich quick. I wouldn't say schemes, but get rich quick plans, right? Because one of my clients enticed me, and she said, oh God, you know, she in this thing, I know there's other bringing members and whatever. So she asked me to come to this meeting. And I said, girl, I'm not coming in. I said, you know what? Let me go. So I went. So when I went, you have all them coming up and saying how this one make 200,000 now, 500,000, and this boy, he's only 17 years old, and he already could buy a BMW and what have you, and what the case may be, right? Yeah, some of them leave their work, and I'm gonna tell you about that because I have clients who left their work and what happened to them now. So anyhow, they leaving the work and they're doing this and whatever. So I listened. I went with a very open mind. I listened, and then after I left and I come back, and then the client come back and ask me, "Girl, you investing or whatever?" She said, "Look, I don't make she make $8,000 here and whatever." And then after 2 weeks, I was in here and I say, "How much money?" No, when they say they make 8,000, they get no money. Eh? Nobody got any money. When they say I make 8,000, that's what they see the trade was at that day. That they sold X for $10 and they must buy it for $2 or whatever, and it's sold on that day for 8,000. I don't mean they make that money, you know. But that same 8,000 they reinvest in. And when they reinvest that money, that's when now the trade went down, price went down, and now they lose. So the last time I went and I said, "Girl, how your Forex going? Because you only tell me how I make this money and I make that money." She said, "Well, it hasn't been going very good." I said, "What do you mean?" She said, "Well, you know, I've kind of lost, you know, some of the money." But I said, "But how come you wasn't telling me these things when that happened? Only when you see the thing spike and they make an 8. So when these people come on to tell you these things, I can't say if they are saying it's real or not, but most times it's just paper, a paper trade that they did, and they just make that and then they reinvest in. So it is not physical money they get in. Because I would tell you, some of those Forex people who promote him with all the big suit and whatever and all on the thing, right now, I can tell you a few of them are without jobs because they left their jobs to do it. I have a client that could tell you that. Then some of them now gone into doing different occupation because it is not working. And they have enticed people to put their hard-earned money into Forex, and it is now not very, I should say, productive or profitable, if you want to use that word. So you have to be careful when you go into these different plans that they have, that they just entice, and they only show you one man say make 200,000, but whether that money is real or not, you have to be realistic and open-minded to see these things and not be very gullible. Exactly. Yeah.
Yeah, she's saying too far-fetched investing 1,700 for 200,000.
Okay, every month you will have to deposit money. So basically, what you deposit in is your money, right? Yeah. The only thing, however, the only mistake I can make, the only mistake that you did make. Yeah, that, and I would have been able to analyze it on a more better page, is that the profit that I would have made, I should have withdrawn. But I saw it was growing, and I say, yeah, I have a little belly, I'm going to notch it up a little bit again. And that is when I saw everything collapse. So probably if I did withdraw, then I would have been, because I saw exactly how much I would have actually have in my account, right? So probably if I did withdraw it, then I would have said, yes, I really get something, but unfortunately, I did not. So as I say, I could try it again. And yes, exactly. Right?
That's when the thing comes in here. Every time you see something climbing, you want to come out. They say, "Hey, I get more money." You understand? So you keep on investing and investing. And when it start to go down, you say, "You go back up just now. You go back up just now." And then when it start to go down and realize that it reach a point where, not the point of no return, but you know what I mean?
Yeah.
It takes. So
what I would advise, if you think just have something like to put everything, just have like a little spear, and you could say, you know what, let's try this and see.
I tried the Forex thing.
Okay.
I went in with $1,700 was the start. Yes, I tried the Forex stuff, and $1,700 was what it would have cost, what it cost me at that time to start up. And we have you go home in the evening and you're dedicated, you're online and they're teaching you to trade and they're teaching you to do this and they're telling you what it look like. And much may I have book right down with password from here to wherever. Passwords to go into this separate, this, you have a demo account and you have to open this and that. And so I started asking questions because I work in, so I don't have time to monitor this market all the time. And the work I was doing required time. I work in the government and I paying people sick leave and vacation and maternity leave, so my time occupied. So I asked the question, how much would it cost me to get somebody to do this for me? And the answer to me was, I can't do that now. As I now come in, I have to reach a certain level. I have to bring in so much and so much people. I have to do this and I say, okay, no problem. And I lock it off. This was $1,700 was all that I went up and I lost. And that was all that this is so much of people, plus invest money in trading, plus learn to trade in order to be able to invest in our stockbroker. So I jumped out immediately. I cut my losses with $1,700 and that was it for me.
But it's not automated, it's the automated system.
You still have to
Yeah. So guys, what I'll take away is that you cannot yeah.
So guys, you want to go to the next video?
Yeah. But it's good stuff you're saying, eh? Because this is what you have experienced, and this is what entrepreneurs are experiencing. Yes. I too have experienced it as well, right? Someone says you're describing what sounds like a pyramid scheme. And so I don't want to knock an alternative form or alternative form of money making. But I would say that in my observation of entrepreneurs, individuals, persons, I have not seen many, right, persons give me positive feedback. Or nor, if I think back of the examples of entities that wielded that particular scheme, right? An example, Amway, Organogold, Forex, right? They all seem to fade. Right? And then there's a new one coming in, right?
Yeah.
And the lure of this get rich without
quick.
work, that lure is foreign to basic principles.
Less than $35,000, less than $10,000.
Indeed.
Most people don't have that kind of money to invest.
Most people don't, and I've seen even with people that don't, they still invested time and money. And at the end of the months, when I came back to them and said, hey, how are you going? Right? I'm not saying that they didn't have people that cashed out in time. Right? I'm not saying that people didn't have large networks to wield and gain that $1,700 investment. So I'm not saying that some people are good or have examples of success, but I'm saying that I'm not seeing many entrepreneurs win, right? Go ahead.
The police entity, I would say, who really benefits are the financial institutions.
The only
the
entities,
financial institutions.
Yeah. Banks and these are large entities.
Yeah.
Because they are invested. So we say that, okay, if they make it, we can make too. But the reality is they are the ones who are winning in their level. They are the ones who win.
Okay. Also, one thing I'd add again was when I was about to invest in one of those entities, they actually had a DVD, right, about it all. Like they themselves gave it to me, right? And I listened out to the whole DVD, and at the very end, they said they are mandated by the FIU to see what the average profit is, right, return for all individuals. And the average return was $1, and their very own marketing CD. At the very last sentence, that was it. And I said, all is good for $1. And I said, all right, so we're going on to smart money decisions. I like to talk about all the issues, but wait, But it's good stuff. It's good stuff. Because I mean,
we had the same issue last
yes,
time, eh?
same issue.
We
Because
couldn't finish.
these are mistakes we entrepreneurs, all of we gonna make, right? Everybody play and toy with it. I mean, come on, you gotta learn from each other, you know.
And entrepreneurs, be careful with your money. You have to manage your money properly.
All right, so
Reinvest your money in what will help you to get capital appreciation, interest, and also profit from your money. And don't just rush at every get-rich scheme, you see.
yeah, and just touching what the guy said in the last video is that the banks are watching your credit worthiness. Are you paying your bills? Are you have the capacity to pay? Are you paying yourself? They're looking at all these things, and it will affect your future because you come into the bank and say, remember, our number one challenge is you need access to finance. So when you go to the bank and say, bank, I want access to finance, they're turning around and saying, sure, we want to get you something. Let me check you out. Ooh, your credit card, horrible. You don't pay yourself. Where your accounts? So these are the questions that are coming back with us for. So we got to make sure we're ready.
Yeah.
Yeah.
But one thing you would like to know is that as entrepreneurs, you have your business account, but you also have to have your personal account. So if it is, and you have to pay yourself first. So if you know that you are taking 6,000 per month, 10,000 per month, whatever, at the end of the month, the first thing you need to do is take 10,000 and put it in your personal account. So what you do is that it shows stability and consistency. Like when you're working for a job, you get a certain amount every single month. That can happen. So when you go to the bank for a loan, they would see that you pay yourself so that you can manage your money. And also we have to look at commingling of funds, right? And when we talk about commingling, you cannot use the business funds to buy your groceries, to pay the gas for the car, whatever, right? You have to use your personal funds for that. So you have to be careful because the bank will tell you about commingling. I'm sure if we have entrepreneurs here, no, the bank is looking at, you can't just take a check in your name and deposit in the business name, right? You can't just be moving money in and out because they're looking at commingling. So you have to be very careful because you as well may want a personal loan. May not be a business loan, but they want to make sure that you are earning income to be able to get that personal loan. And that's where you build your credit rating as well. So let's play before we talk again and we finish.
Hello, my name is Mike Poulin. I'm a certified financial trainer with the Financial Jam, a personal financial services company that works with clients to help them set financial goals and create a plan for accomplishing them. Educating individuals on personal finance has always been a passion of mine because of the positive impact that it can have on everyone's lives. I have always wanted to spread financial literacy with the mindset that everyone can achieve their goals in life with the right amount of financial knowledge. This all starts with changing one's perspective of money management through simplified explanation and open reflection of past financial influences. I am interested in helping others understand that finances can be fun and not stressful. Welcome to Fundamentals of Personal Money Management. This lesson is Making Smart Money Choices. In this lesson, we will learn how to put our new money management knowledge and skills into action by uncovering the factors that influence our financial decisions, setting realistic goals, and devising strategies to change our behavior. Before we can start making smart money choices, we need to understand the factors that influence how we think about money. Much of what we learn about managing our finances comes from our family and our community. What did your family teach you about money? Were your parents diligent savers who never splurged? Did they spend everything they had and take on debt? How did this affect you and the way that you view money? Similarly, our friends' financial habits affect our own financial behaviors. If your friends like to spend time together shopping or eating out, you're more likely to spend your time and money on those activities as well. Even national norms can influence us. If it seems normal to take on large amounts of student debt in your country, you might not think twice about whether taking on debt is the best decision for you. To uncover the hidden influences in your life, make a list of what you've learned about money from your family, friends, and wider community. Which of those lessons will lead to positive financial decisions? Which of those could negatively affect your finances? Setting financial goals can help us overcome negative influences and start making smart money decisions. If you don't know where to start, ask yourself, what's important to you? What do you want your life to look like in 1 year, 5 years, or 10 years? Make a list. Once you have ideas about what you'd like to achieve financially, you should turn each goal into a SMART goal. This means that your goal should be specific. It should be clearly defined. Measurable. You should have a way to evaluate your progress. Achievable. Do the math to calculate when you can realistically expect to achieve your goal. Relevant. Your goals should align with your values and what you want out of life. Time-bound. You should be able to identify a target date for when you will achieve your goal. For example, earn more money is not a SMART goal. Submit 1 job application per week to secure a position as a project manager for a nonprofit making $60,000 by the end of the year is a SMART goal. Following these guidelines will put you in the best position to start taking action towards your goals, but you will likely need to change your financial habits and behaviors to achieve those goals. There are several strategies that we can use to modify behavior. Consider which of these strategies work best for the behaviors that you're trying to change. Monitoring. Keep track of behaviors that you do or don't want to do. Perhaps you've decided not to buy any new clothes for 1 month. To keep track of your progress and stay accountable, use a calendar to mark each day that you don't buy clothes. Start small. Behavior change takes time, and it's okay to start small. If you buy lunch every day during the week, but you want to cut back to save money, commit to making lunch at home 1 day per week. Once you get used to doing that, you can just add on another day. Automate. Set up systems that make the behavior you want to do easy, or ideally, automatic. If you want to ensure that you pay your credit card on time each month, set up autopay so you don't even have to think about it. Pairing. Link a behavior that you already do to a behavior that you would like to do. If you want to start tracking your daily expenses, commit to doing it after something you do every day, like brushing your teeth. Rewards. Give yourself a financially healthy reward when you achieve a big goal. For example, after you reach a big savings goal, you could go out to dinner with a friend to celebrate. Keep your reward proportional to the goal you achieve. Community. As we already established, the people around us influence our behavior. You can use this to your advantage by surrounding yourself with other people who are already doing the things that you want to do or are working towards similar goals. Remember that you are seeking progress, not perfection. Changing your behavior is not always easy, but ultimately it will lead you closer to your financial goals and the kind of life that you want to live. For more information on this course and to access related resources, visit our website.
All right, guys, how did you find that information was?
How many of you all have goals, financial goals?
You try
Or the
to.
chat ask?
Try to. Actually, we want to do something. I think we had a poll, right? So we can ask you guys in person to see your hands. But Vasha, if you could run that poll, if possible, you're just gonna want to ask how many people have finances, like financial statements, right? That's step 1, right? Vasha, if you could hear us, let us know. Vasha is our behind the scenes guru, right? Right. But let's see by hands in here. How many of you have financial statements?
What you mean by a statement?
So, okay. So let's say if you look at your revenue and you track your expenses, I'll do one better. I would show you mine.
Because a financial statement is like a budget. That's what you're talking about?
No.
Okay.
Budget is for, is budgets are like what I would have personally, right? I would have a personal budget, right? But I will show you mine. Don't judge me, everyone.
Let me see what you're talking about as
right?
financial, because my opinion of a financial statement may not be the same as yours. Let's see where you look at that.
And no print screens either, guys.
You're talking about income and balance sheet and all that?
Yes.
Okay. Well, those are financial statements.
Let's see.
So financial statement is like an income statement where you have your income, less your whatever you're spending, your profit, and your balance sheet will detail your assets, so what you own and what you owe, and the income. That's what you're talking about?
Yes. So anyone has an accountant?
But only online, the those entrepreneurs that we have on now, do you all produce financial statements on a monthly basis so that you can see where your business is at any point in time? And if so, do you use any package? Because we have like QuickBooks, we have Pt2 accounting that really helps you. You don't have to worry about it. Every time you just plug in everything, it can even manage your stocks in there. And it produces financial statements for you anytime you want it. It's on a real-time basis. You get income statement, you get cash flow, you get balance sheet. And these are things that you will need to take to the bank to be able to get a loan or to be able to send for any sort of credit. Suppliers also need that. They want to see what your financial stability is, right? I am doing a webinar on how to read financial statements and all that, but that wouldn't be under Ehub, but I could always share it on Ehub when we're doing it.
Sure.
So that
Actually,
is to understand how to read financials and how to kind of do one. I did have an example on how to do a financial statement.
so actually we also have, I'm just gonna show you guys an upcoming thing we have. Yeah. Right. So you actually have a financial literacy workshop coming. This is a Fulbrighter, right? This is like a Fulbrighter is someone who benefited from the U.S. Embassy and they're like a PhD. So she's a doctor in financial literacy, right? Also, but she's from away. But they had like a trade with Trinidad. So she's coming to help with the expertise next month, between the 9th, 11th, and 12th of April, and 15th, 16th, and 17th of April in Couva and Superior, right? We do need an accountant, a local accountant expert. So I just pitching in there, Sandra, to be part of this. But here's the question. The question was, do the entrepreneurs in Trinidad have financials? And I couldn't answer. Right? I had it because I burnt in my last business. I burnt, right? Until more like it's like to do business with certain companies. Let's say I was in the medical arena and had these big companies, the keys, big company, but you're bidding against them. And to bid against them, you need to have your business in order. What does business in order mean? VAT clearance, tax clearance, right? You have to be compliant. To get all these things, you need to do your books and pay your taxes. To pay your taxes, you need to have, you just can't come and just do your accounts, right, yourself. No, you need to have accountants, your accounts done by an accountant. You need to have legit audited accounts, right? So all these things forces the entrepreneur, the young entrepreneurs that we are to step up. Otherwise, you cannot compete, right? And stepping up, you say, okay, how am I going to step up? Because I mean, all my time is busy. But I needed a bookkeeper, I needed a accountant, right?
But do you know why we do have very little expansion with the small business people? It's because these type of records, in order to get a loan, because you may not be able to expand on your own, you need to have credit. Credit is not a bad thing, eh? Credit is not a bad thing. Credit helps you to move forward in life. You can't buy a house with just whatever money you're earning. You need credit to buy a car. You need credit to expand your business. But to expand your business as an entrepreneur, you need to have proper financials. Because when you go to the bank, they ask you for your financial statements for the past 3 years. They ask you for cash flow, right? Because cash flow is part of your financial statements, right? So you need to have that because they want to see how is your business progressing. Are you making a profit? Are you making a loss? How are you managing your money? And if you don't have that, and that's why a lot of small business owners not privy to get a loan or cannot apply for a loan because they don't have the requisites to be able to get a loan. Because, and a simple thing as those, just like what Shem saying, simple thing like a financial statements prevent them from moving forward in life and from expanding their business and moving up.
And just there's a link in the chat, guys, that I would like you all to fill as we chat about this. So yeah, and I would show you guys my this is Marina. I have a comment, right? I'm an accountant and I share this with them. They ignore and make and spend money as they please. Only when they're in trouble, they find us. Business owners need to be prudent by having an accountant and a business coach.
Marina, you are absolutely right.
Absolutely right. I had a business coach for like, I had one session with her. She looked at my list of stuff to do that I was doing. And she said, Shem, you need an admin. Go and get admin. I was like, all right. Because you know me, I was going to spend no money and my money is to work on it. But I want to get admin. Best decision ever. Honestly, I don't even have time to set up all these courses. That this year, as an entrepreneur, I'm like, wow, it's just difficult. And this year is impossible without an administration person. As only recently, I watched advice from another billionaire guy, right? And he's talking about this other billionaire he said. And the first thing the billionaire did was go and sit down with his admin for an hour and a half. And the rest of the day was his own. Right?
Delegate.
The most important thing for you guys is first getting administration, right? To make sure that is in order. Make sure, like, my weakness was finances. It killed me on my business. But then I got administration. No, administration takes care of the finances. Now I could show off, right? Now I'll show you guys.
So what you do is you capitalize on your strengths and you hire your weaknesses. Remember that. Capitalize on your strengths and hire your weaknesses, outsource your weaknesses. That makes sense. You're going to fight up to go and learn how to do these things. You do what you do.
Yeah. It is a lot. It is a lot, yes. So this is QuickBooks, right? So I use QuickBooks. I used it for my last business. It worked, so I use it again. What happens is that I would all the transactions is entered into QuickBooks, which is time consuming, which prevented me when I didn't have admin before from really taking use of it. But now having done it, is the platform which your accountants plug into, right? And I say, okay, yes, everything is legit, everything is good, and they work with that. And they create a statement of accounts for you. But you have in our platform, I can now come and say, all right, let's do a report, all right? And I might say, let's see, report here. Reports. And they say they have a balance sheet, a profit and loss. So for example, did you make a profit last year, the last 2 years, the last 3 years, right? And I could come in and say, okay, let's do a profit and loss, right? A little judgment, right? but you'll see, right? Okay, this is pretty good. So January 1st to 21st of March. So I am Louisville Cinematography. I would say, ooh, sales 333K, not bad for weddings and corporate stuff. And gross profit maybe 236, and that's looking good. Woo! Go back. No, you can't. You can't, because you have expenses, you have bank charges, and this is no such the benefit. You start to see all the little things that eat away at your money, right? Business levy expense, yeah, business levy. You're legit, right? And another reason to be legit is, I'll give this example. As we work for the government, somebody had this lady, a caterer, right? And they said they love the food. Come, work with us, right? And but wait, any OPR? Oh no, I'm not an OPR.
That's another thing, guys. OPR.
Opportunity gone, right? I just got a wholesale business because they had photographers that they were working with before, you know. I said, hey, how come you're working with me now? The first time we actually get through with this company, that business. Well, we had a photographer who was good before, but with OPR, they couldn't get through. What does that, but this OPR is a lovely word, but what does it mean? It means little entrepreneurs, young entrepreneurs, stepping up to being compliant. That has been my hardest hurdle, right? As a young entrepreneur, stepping up. I have a picture of me. I went, AG's had a conference and they're saying, hey, you have to be good governance, that thing. And I stood up and I say, hey, I appreciate being good governance and thing, but I am the one that shoot photography and I am busy and I don't have time to do all this.
Mm-hmm.
I said, I know, right?
And then you end up at no work.
You can't.
Do you think that Opera is a good
Yes.
avenue
Mhm.
for young entrepreneurs?
Yes.
Yes.
Because remember,
He's asking if Opera is a good avenue.
when we look at entities like, for example, just talking about
Mm.
Sami, Siram, all these big entities. So you as a small firm, big monsters.
Mm.
So remember, you have your requirements, you have to have your,
Correct.
you have to have your money and you're not needing your finance.
He's asking, is the Opera a good avenue? I'll say the
Don't
Opera.
think small.
Yeah.
Don't think small.
I'll say the Opera is a good avenue to force you to step up. Because there's a number of things happening when you step up. So let's go through, right?
And let me just pick up here before you. I was in a session just recently, a couple of weeks ago in Sandra, and with Ethiopia. And what they are saying is that they are going to have a base with Sandra because clients are requesting for more assistance because there are some challenges. And what they are going to do is that due to the format that they have, it's a lot. So
It's
if
a
you
lot,
as
it's a
an
lot.
entity, you have 50 services that you provide, you have to follow for each entity. So what they're going to do, what they're saying is that they're going to, let's say,
Simplify it.
right, let's say there's 4 sections, they're going to break it down to 2 sections. So it's going to be a little more easy.
Yeah.
I understand. What he's saying is that the Opera is intended to open an office in San Fernando, what you said, to make it a little bit more accessible, right? So yes, so what the Opera is doing is forcing young entrepreneurs to acquire good governance, right? So good governance is going to do a number of things. I'll show you, right? Now that you have to account for all the expenses, right? You're going to see where all your money going. Right, so I know Green Fund Levy, I paid $962. Right, for me as an entertainment, $4,000. For my website, it's trying to see where all the money, all the things are eating away at you. Right, and I know that, okay, how much, let's say, how much I'm paying people, right? I'm a partnership, so I do get paid, right? In that way, I pay myself, but it doesn't track in this year, right? And I could begin to see my total expenses, right? Because you could see your total expenses, you can start making better decisions, right? Now, meanwhile, the last part was, how do you compete against the big giants? These big giants have departments, call accounts.
That
right?
do that for you.
Right? They are more than one accountant, 2, 3, right? That do all of this. So they have that advantage. So you need to get there. Otherwise, you're never going to compete with them, right? At the same time, young entrepreneurs are young entrepreneurs' biggest enemy, right? Because if we all don't do it, you and let's say, I can use photography as an example. I'm a photography company that is paying the cost of doing all the administration, competing against a photographer who is not doing any of that, right? So he could charge less because he's not paying admin. But at the same time, he cannot compete, let's say, with an agency.
In a bigger market.
In a bigger market, in a bigger way, right? All right, and we know every entrepreneur's goal is to advance and get bigger. So when you're doing this, you have to battle the persons that undercutting your price and battle the big agencies that have attained the cost of efficiency, right? The benefits of efficiency. Right? Yeah, let's see what Blue Water is charging for a bottle of water now. $2. $2 for a bottle of water. That is, I mean, I know they have accounts and everything. So if it is that you as an entity trying to come up, right, you gotta, yeah. Yes, wow indeed, right? So cool, right? Right, yes, OPR registration is key. Yes, it is. You have to. You have to. You're not gonna beat anybody. You're not gonna get a big contract. It's just not.
But possibility exists.
Yeah.
Once you're on the OPR, possibility exists for you to get something bigger and better. And you're actually competing against the entrepreneurs who don't want to come on. So yes, they might be able to charge less because they don't have all the administrative costs that someone on the OPR has to have. But at the end of the day, they're limiting themselves to just being right in one corner. Whereas the person or the entrepreneur on OPR actually has an open playing field because they could do work for the small man, the big man, wherever, in the international. So you want to open that playing field. You don't want to just be left right in that small little corner and you work in a silo. So you have to look at where you want to go. And that's the vision that you have. You have to have your vision of your company, where you want to take it, your business, and then work towards achieving that vision.
Cool.
I know we're on.
Yeah, we're going good. You have some questions for you guys. Before I come with all the questions. Questions for you guys. Online, let me just check in with the online folk. All right. Yes. All right, so let's go. Yes, we took all the lessons. I know some people didn't see the first one, so the person who saw the first one will help them. Which of the following are types of income? Wages, sales, investments, alimony or spousal support, all of the above or none of the above?
We're waiting on answers.
Waiting on answers, guys. Let's see what the chat can help us.
Let's see what they see.
Akim say all of the above, all of the above. All right, you good?
We're looking at wages, sales, investments, alimony, spousal support. What you say? All of the above? Okay.
All right, all of the above.
All of the above. Let me go. We're going good. What they say?
Yes. All right. Let me show. Right. Expenses are necessary and unavoidable expenses. Oh, what type of expenses are unnecessary? Are necessary and unavoidable expenses, but the amount you have to pay can vary from month to month. And then the other type of expenses are those necessary and unavoidable expenses in which the amount you pay monthly does not vary.
So it could be fixed expenses or variable expenses, discretionary, which means you could decide whether you want to pay it or not. Fixed, variable, discretionary, variable, fixed, or discretionary, variable. Which one do you think you want?
A, B, C, D, or E.
Because we're asking about expenses that are necessary, and the first one is what? Expenses are necessary and unavoidable. But the amount you have to pay vary from month to month. And then you have those are necessary and unavoidable, in which the amount you have to pay does not vary. So which one do you want first?
All right.
Variable and fixed.
Again, that from
Right.
everyone online as well. Okay. What is a budget deficit? When your income exceeds your expenses, when expenses exceed your income, when your expenses and income are added together equals 0, when you have no expenses. A, B, C, D, E, or F? B? All right. Okay. All right, you can be from online as well. What is the first step you should take to fix a budget deficit? Increasing your expenses, find ways to increase your income, look at your discretionary spending, limit fixed expenses. B, find ways to increase your, I like all you're thinking. So who's saying C? Look at your discretionary spending.
Good. We have a unanimous there with from on this side with
Yeah,
with find ways to increase income.
but online saying discretionary spending. See? All right, all right. 1, 2, 3.
Yeah, so it's B. Six.
I like B, but C is also answer.
I had put C, but it's easier. Yeah, but go ahead. Whichever one you want to put.
Whichever one, B or C, guys. B
B or
or C.
B is
Find ways to
find ways to
increase.
increase your income. Yeah, right.
Right, so which one? B? B, all right.
We
You
go
go
on
with
B.
B
We
for
go
now,
on
go
B.
with
We
B.
go on B.
All right. If you all get it wrong, this reflects on you, not me, okay?
Right. We go no just now. We go no just now.
All right, so what protects financial resources in the event of an unplanned incident, like a natural disaster or accident, and insulates you from the financial impact of life events that can cause dire economic consequences? Cash, insurance, government, partnerships, all of the above. Yeah, people knocking on the back. I see loser is the pessimist. She say none. What is the difference between simple interest and compound interest? Simple interest is much easier to understand than compound interest. Simple interest is calculated and paid on just the principal, whereas compound interest is calculated on both the principal and all of the previously accumulated interest earned. Simple interest is a one-time payment while compound interest is paid out every month. Simple interest is only calculated on a proportion of the principal amount, but compound interest is calculated on the full amount of principal. All right, online is hitting the part, guys. They're adamant that it's B.
What you see? Yeah.
All right.
B.
All right. According to the rule of 72, you can divide 72 by the annual rate. This is the first one, so I know everyone didn't experience this one.
No, he spoke about rule of 72 in the investment, so we good.
Okay.
We on.
Oh yeah, that's true.
Yeah,
According to the
we
rule
talk
of
about
72, you can divide 72 by the annual rate of return to receive a rough estimate of how many years it will take for a one-time investment to double. For example, if Gloria invests $6,000 in an investment vehicle with an annual interest rate of 4%, how many years will it take for the investment to double?
It's 6,000 and the interest rate is
4%.
4%. You have 4 years, 11 years, 15 years, 18 years, or 20 years. Which one you want to see? They have 4 years, 11 years, 15 years, 18 years, 20 years. But it's 4% interest, and you want to use the rule of 72. You know it's rule of 72, right?
Remember, according to the rule of 72, you can divide 72
by the rate of interest.
By the rate of interest. And the rate of interest is?
4%.
All right. 72 divided by 4 is? All right, I end at 18, and the group is saying 18. So you're going 18. Oh, this questions are great, isn't it?
Yeah, they're easy.
So when the bank tell you 1%, how long will it take for your money to double? 72 divided by 1.
You just gotta wait. You gotta wait your lifetime.
Ooh,
and the rate is not even 1%. The rate is not even 1%.
Now you can laugh at them, right? When they say, tell us, hold on, and just calculate.
Watch me, you can die and leave your money right there. Yeah,
Which of the following are investment vehicles? Stocks, bonds, mutual funds, savings account, certificates of deposit, all of the above or none of the above? All right, again, F, all of the above. All right. Investment vehicles such as savings accounts and certificates of deposit have a higher risk than investment like bonds and stocks.
True or false? Read it over for them.
Investment vehicles such as savings accounts and certificates of deposit like government bonds, certificates of deposit have a higher risk than investments like bonds and stocks, the stock market.
True or false?
That Dane lose all the money on. All right.
Sorry.
Investment vehicles such as savings accounts and certificates of deposit, like it's a local example. What do you mean by
No, certificates
deposit?
of deposit is like we now have you have different things, but you could equate it to like a fixed deposit.
The fixed deposit account.
Just
in the
equate it
bank?
for that for simple understanding.
Is it true that those types of investments
Have high risk
higher risk than the stock market?
than the stock market. So that's true or false? False.
Good, good. When applying for credit, potential lenders look at 3 C's to determine eligibility: capacity, character, and collateral. Which of the following describes the meaning of collateral? Your ability to pay the debt you are seeking, a consideration of your credit worthiness, an asset pledged to the creditor until the debt is paid off. See? All right. Yes. Online is saying C. Good, good. 12. Setting financial goals won't help you in overcoming negative influences toward making smart money decisions. True or false? False. Everyone on good online says false as well. All right. Which of the following outside factors influence how we think about money? Your family's financial decisions, your friends' spending habits, national norms, people in your local community, all of the above or none of the above? All of the above. Good job, good job. Online, y'all with us? Yes, I've seen all, good job online. Well, we'll see if y'all did a good job, you know. Which of the following is not one of the 6 strategies to modify behavior regarding money? Monitoring, rewards, automate, outreach, and community. Which one, guys? Which of the following is not one of the 6 strategies to modify behavior regarding money? Monitoring, rewards, automate, outreach, or community.
What did you see?
Some people are hearing rewards, are hearing somebody say D, outreach. Outreach or rewards? Which one? Rewards? B? All right, we'll see.
Yeah, because you can hardly see it on the screen too. Yeah.
Okay. Nice. Alright. The use of a calendar to keep track of behaviors you want to eliminate is an example of which strategy? Pairing, start small, community, monitoring. Monitoring. All right, online saying monitoring. Okay, good. Let's see. All right. Let's see how good. Somebody want to go back to number 10? Smart investing requires that you choose investments according to the amount of time you can let the investment grow. It is time horizon and risk tolerance. Is that true or false? Yes. Oh, skip out some.
9.
Investment. Oh, this is the one.
You put false.
Yeah, false. Hey, good catch, Marissa. All right, let's see. Are you ready?
I say outreach. Yeah, but go ahead.
Ooh, one of your answers are correct. Oh, that's pretty good. Let's see. Which one is wrong. Sorry, which one could have been answered better? straight to the side here. Which one of the following is not one of the 6 strategies to modify behavior regarding money?
Yeah, because remember when he spoke about it, he said you monitor. And if you did achieve your goal, you give yourself a reward. Yeah, and he did say community, you need to have a community to be able to help you and automate. So if you automate some of your expenses like paying your bills, etc. on time. So outreach is not one.
What's your
So
going
that's
with?
it.
Outreach, all right. Let's go, let's submit. Nice.
That's it.
Good job, guys. Yeah, well, I'll do this later, right?
You can actually go on the link, do the quiz, see that we went to the course, and you will get a certificate. Yeah.
That's
So
right.
I went and I did it when I was organizing for here.
Yeah, you can print it.
Yeah.
It was-
And you could print it. Let me see
Yeah.
if I did mine. I'll tell you.
Yeah,
I'll tell
you
you I
good.
did mine. Let's see if I can have it here.
All right, so thank you very much. We went over by like 11 minutes, but such good stuff. I'm sure somebody have all kind of
And if you
questions.
see it here, this is the certificate that you get.
Ooh, I have some questions here. What is the cost of an accountant for a small business?
They will have to negotiate with them accountant for that.
Yeah, I didn't negotiate. I currently pay 700, but I have a bougie accountant, so it can be less. What's that? Someone mentioned something?
Yes, Ms. Archibald speaking here.
Go ahead.
I have a question concerning what was mentioned earlier on about the credit union and the 50,000 that is be given when the person die. I would like to know what is the procedure to go through to get the rest of money if there is any, because we have a situation like a relative died in our family and the credit union wrote a check for the 50,000. But we don't know if it have any more money there or so on. Thank you.
So Sandra, she's asking, well, first, implicit in your question, is it possible to get more than that $50,000 that they guarantee from a credit union should someone die?
No, it used to be 5,000. It used to be 5,000. They actually increased it to 50,000 now. And after the 50,000, you will get a difference, but you have to go on probate. And once you go on probate and get the letter of administration, and then you take that back to the credit union, you will get the rest of the money. But you can get up to 50,000 as soon as it is when you apply, etc. But you have to do no one. And as if you are beneficiary, a name beneficiary on the account, right? With the credit union, you will get up to 50,000. And anything after that, you have to do a letter of administration and then come back to the credit union with that letter, and they will give you the difference. It's not that you're not going to get the rest of the money, except that you'll have to do a probate now to get it.
All right, someone else?
Okay, thank you very much. Does it have to be
Yeah.
done within a certain period?
Yes, so a probate normally takes, it could take any time. I mean, some people have the experiences like 6 months to sometimes 3 years. It depends on the documents, the attorney, whether you have consensus among the siblings, etc., to be able to get the letter of administration. Sometimes it takes, depending on who you have, it could take a short space of time. But it's not that you would not get the rest of money. It's just that you could get up to 50,000 as a beneficiary, but you have to wait and get probate before you could get the rest of the money.
Okay,
Yeah?
it's been 1 year since the person died and the beneficiary is the person's son. He's the one who got the check for the 50,000, so he will have to go through that
And
procedure.
do the probate, yes.
Okay then.
You'll have
Thank
to get
you.
letter, yeah, go and do probate and all that.
Thanks much. Very
No
informative.
problem. You could put my number on
Sure.
the chat because I think some
Persons
persons were
yes.
asking, yeah.
This is Sandra. I'm putting Sandra's contact here.
I will try to reach out to everyone. Once we get the list in,
Emails,
I will call everyone to just get our feedback, because I know it's very late now, so we can get our feedback on
What's the number?
788-9160. So my number is 7. I'll give you a card. Take it down.
Cindy Lou, yes, very well said. A lot of hurdles. And so remember, the Hub wants to create like a manual. Why we're going through all this, why we want to hear the issues and hear the hurdles. So if we could catalog the hurdles and we ask all the right people, what is the right answer, then we can say, okay, this is the steps that each of us, though difficult, have to take. And then we could also, as a hub, approach, let's say, one of the stakeholders and say, okay, all of us have this issue. Can you please make this easier? Okay.
Finish?
Yeah, I think so, you know.
Yeah.
Right? Yeah.
So I would like to say, not like, but thank you very much. You have been a really participative group. I love the comments in the chat and from our local attendees here. You all are awesome. Thank you very much. I do hope that the information we shared here today would be beneficial to you in some way, and that it can help you to progress with your personal life as well as with your business life. And if you should require any more information, you could always contact me. My number is on the chat. It's 788-9160, and I'm willing to help you. I'm also I'm a business coach. I'm a woman of many hats. I'm a business coach, consultant. I'm an entrepreneur working with Guardian as a sales rep, and I also conduct training and webinars, etc., because I like to educate and share my expertise with everyone. So if you need any further information, you could always give me a shout. It's not a problem. You could WhatsApp me. If I can't take a call right away, you could WhatsApp me and I will definitely get back to you or call you back. Yeah. So it was indeed a pleasure. Thank you all very much. Thanks to the EB Hub for inviting me. I really look forward to working with you all in disseminating information.
We have adopted you as a facilitator, mentor. Right?
Yeah, I know.
So we see you guys next month again, right?
Yes, every month this happens, guys. Every month around this time, right? But just next month we have a special workshop, right? Like an in-person workshop for a full day for 3 days, where we have to get us up to speed on financials.
Right? That is this one in 1911 and 12.
That's correct.
So you didn't book me yet. How you know about our free those days? Eh?
You're gonna beg. You had to come at least one. At least no, yes. But this is when the Fulbrighter is coming in, so we could take advantage of her as well. Apart from this, is we need to sit down. Part of this grant that we wrote up is to sit down with the banks and ask them, hey, yeah, what is the issues that we need to overcome, right? Sandra, I'd love to have you there for that as well.
Yeah.
Right. But we need, a key part of this is the entrepreneurs, is what you guys say are the issues.
Yeah.
We have to capture. We also have to capture where we are at in this journey of finances. In terms of even contemplating how to structure this course, we were saying, if it is that the entrepreneurs learned what the banks needed, right, then we can begin working towards it. But as far as I know, I'm not sure if we know that. So then there's little encouragement to begin the journey of making sure all these finances are in check and everything.
Because I can tell you, my business is Simple World Solutions Limited, right? I just do everything free right now. So I've been doing all the webinars free, giving information free, doing work for people free. I probably just like to give free, right? But yes. So what I'm starting to do now is that I actually want to really start to really do this as a business to earn some income. So I went to the bank because my business has been established since 2014. So I do annual returns, and I hope you all do up your annual returns and all that, because it's $300 per month per director. And I think, I don't know if it's per directive, I think it's per month that you have to pay a penalty for late filing, right? Make sure your annual returns. That is for annual returns with companies registry online system.
Yeah, which one of the fines it is. It is one of the many fines, guys.
No, yeah. So if you like my annual return, my company was registered on the 20th of February, 30th of July, 2020, whatever month, 2014. So on August month, it will come off on end of July. So you have to file in August. Anything after August is penalty. And now the system is very easy. Let me tell you, I filed an annual return for someone, and this was last week, Saturday. Well, Saturday gone. I set it at 7 p.m. in the night, and bam, I sent email come, and the annual return was there. We got it immediately. I mean, before taking kind of years and months, but now it's easy. So make sure. So when I got a listing and they asked for a series of documents that they want with one of the banks, and one of the things that they want is financial statements. One of the things they want, of course, they want all your IDs and etc., but they need to get your financial statements in the last 3 years. So it's something that you already need to take cognizance of, that you have to really start to be structured in your business. And that's the only way you'll know whether your business is performing or not, because when we operate like, I'll buy what 10 cases of juice today, and you sell it and you make a profit. But you don't even know if you make a profit, because you don't know how much you pay this one, how much you pay that one. They just write down on a piece of paper and then they can't find the paper. I mean, I know my mom has a shop, and what she used to do was she had this is a long time thing, this thing with a piece of wire. Yeah. And every time they get a bill, they just stick the bill in the wire. So at the end of the month, she has she just go and pull out all that and think. And I mean, to be honest with you, I think I want to implement that by me, because half the time you put the bill somewhere and you can't find it, but if you have that wire thing, you just stick it in there and all your bills there. And that's amazing, it was very simple. She had no file and folder and whatever, but she just stick it in the wire. And it was awesome. And that's something that we need to really make sure, keep your bills, record every income, record all the transactions, and you will become successful, trust me. So thank you very much again, and thank you, Shem.
No problem. And thank you.
And thank you all very much.
And thank you for the corporations for assisting, right? Superior and the Kuva Tabiki Talpara Regional Corporation. Always helpful. Thank you, guys. Guys, the official part is over. If any last minute questions, put it in the chat. Sandra didn't leave the room yet, so you could ask her. Right? Thank you, everyone. Ruth, hold on. Same. Next month you have a date, and you have the big workshop as well, right? The financial literacy workshop.
Yes.
Yeah.
So if they can't come in, we're gonna have them online, right?
For this one, there's like a whole thing. The cameras won't last that long. I wonder. Yeah, just try. Yeah. Understand. We'll do better. No problem. Thank you. Yeah. All right.